Hey guys, Bill Soriano here. We're about to get started with the Asian session here in under an hour or so. I wanted to make this first video just showing you a training for the end of day scenario, right? Not end of days like Arnold Schwarzenegger. Sometimes it ends up being end of days for some traders out there because they don't know how to handle it. But just a scenario for handling any trades at the end of the trading day, which is at 5 p.m. Eastern time. That's when the market rolls over into the next day. And that's where you have this period where spreads open up like crazy. And if you don't watch where your stop losses are at, if you're holding trades, you can get taken out of those trades, even though when you come back and look at the candles later on, they're not even nowhere near there. And I'm going to show you what this looks like in a minute. And again, this is only for advanced traders, and this is only for people trading on the lower time frames, the 1 minute, the 5 minute, the 15 minute. If you're taking your trades on a 1 hour, 4 hour daily, you generally don't have to worry about end of day scenarios because your stop losses are far enough away to accommodate all of the noise that happens at the end of the day at 5 p.m. Eastern time. This was a trade I took in AUDNZD this morning, actually, and I missed the entry on this trade. You could see here, you see my trend line here, and this candle right here was the candle that activated my trade. Everything was good on our quantum scanner. This is our trend trap strategy I'm using. Jay teaches this in our educational platform. Like I always say, you sign up, you get access to his 5 bootcamp videos and 5 live training sessions every day. Training sessions every day where he goes over everything for you. And in the downtime, he sends chart markups that you can have sent right to your phone that have ranges or zones on them for you so that you know how to mark up your charts and where to look for your potential trades. Anyway, if you want to get access to that, let me know. You could become a member, get access to everything, and then in 7 days, if you're not happy, you can ask for a refund, get your money back. But you're not going to do that if you get started. Anyway, I missed that, so I ended up getting in. I got stuck doing something. I came back to the chart. I forgot. This candle here did not, open and close below here. Didn't give me the trend line break that I wanted. This candle right here did. I missed it. By the time I got to the chart, price was already down here, all the way down here. So I ended up getting in the trade. And then this trade I held through the end of the day. And you can see here, this trade does come back up and hit the neckline retest perfectly. That's the neckline retest right there. This is our M pattern, and that is the neckline in the M. If you can't see it, if you put the line chart on, you can see the M clearly, and you can see the neckline right there. Okay. So if you're having trouble finding these M's and W's, just switch to the line chart so that you could see them. That's the neckline. It came back, it hit that perfectly, and then it took off. So I could have waited. What I should have done was when I missed the opportunity up here, I should have waited for the neckline retest. I could have gotten in even a better entry, less risk to reward, and I may have already been out of this trade with my profit. But because I got this terrible entry here, and I decided to take it instead of waiting for the neckline retest because of my fear of missing out, right? Because what if it just keeps going, right? So anyway, when we came to the end of day on this, let me just see if I can pull this chart up here. I took a screenshot of, I think I took a screenshot. Yeah, I took a screenshot of my broker account here just to show you what I'm looking at here. And so this is AUDNZD, and you can see my markup here. That's where I got in. There's my invalidation zone. My target's down here. I pull this back to a 1.5 because once I get down below here, I usually decide to move my stop to break even, or I might just reduce the risk in half. I usually do something when under normal circumstances I get to there. What I want to show you are the bid and the ask price on this pair during the rollover period from 5 to 6. Okay. This is from 5 p.m. to 6 p.m. Eastern time. That is the ask price right there, that line. That's where when people buy, that's what they have to pay. This is the sell price all the way down here, or I'm sorry, the bid price. So if somebody sells, this is where they will sell at. Okay. So in order to buy, if you look over here, the spread at this time was 23 and a half pips. So the normal spread on this pair is less than a pip. Okay. But during the rollover period, the spread opens up to 23 and a half pips. So what this means is, that, and you also get these big giant wicks. See how you get these wicks going all the way down to the bottom of my zone here that I have marked up, right? And the thing is, what happens is because of the way this spread is, if price would have moved up to about the break even point where I got in this trade, this ask line would have moved all the way up to here and hit my stop, and I would have got taken out at a loss. So you have to understand that because the spread opened up 23 pips, right? If my stop loss was 28 pips away. Actually, in this case here, it was actually 24 pips, I think, right? So if price is at break even, I'm going to get taken out of the trade because of the spread. Because what happens is at 5 p.m., right before 5 p.m. Eastern time, at the end of day, the rollover period, the spread opens up like this. Again, 23 and a half pips. Normal spread is less than 1 pip on this pair. Okay. So that's what happened here. Okay, that's why here's what you have to do as an advanced trader. I'm sorry, I forgot what I was trying to teach you here. You have to go in you have to set your alarms for 4:45 p.m. I set two alarms, 4:45 p.m. and 6:15 p.m. At 4:45 p.m., my alarm goes off on my phone. If I have open trades, I have to go into my broker and I have to remove the stop loss. Now, that puts me at a disadvantage and that opens me up to potentially losing more than I want to on the trade, right? But I have to make that decision. You either stay in the trade and remove the stop loss, or you just get out of the trade. So your decision becomes at 4:45, you come to the chart. If you've made enough money on the pair, let's say you're in profit, you're pretty close to your potential target, maybe you just exit the trade. But if you decide to stay in the trade and you're trading on the 1 minute, 5 minute, 15 minute, you need to remove your stop loss, or I guarantee you in a situation like this, most times your stop is going to get hit even though price comes nowhere near your invalidation zone. Okay. You could see the distance between the ask price and the bid price. So you could see what that looks like. If price would come back to about break even, the ask price would probably be all the way up here, close to my stop loss. And if it moved up just a little bit more, that ask price would move up and take me out of the trade, because that is what determines where you buy a pair or a stock at, the ask price. And the sell price is where you get out. Now, normally the sell price is always right where it's at, most of the time. So, you sometimes you don't have to worry about this. In this case here, this was a short position. So in order to cover this, get out at a loss or profit, I have to buy. So I have to worry about this a little bit more. If you take a buy and then you're just selling to get out, it's not so, it's not so bad, because the bid price usually stays right where the price of the currency is at that time. It's the ask price that really blows up here. This spread usually widens up like this. And so if you don't remove your stop loss, more than likely you'll get taken out of the trade. Okay. So that's the decision you have to make. You set your alarm for 4:45. You have to decide, am I going to stay in this trade? If not, you exit the trade, you're done. If you're going to stay in it, you have to say to yourself, if I don't remove my stop loss, my stop is probably going to get hit when the spreads open up, right? And so that's when you have to make a decision as an advanced trader only to remove your stop loss. And then at 6:15, when your alarm goes back off again, you come back to the charts, hopefully you're in good shape still, and you put your stop loss back on. So that's what I did today. Okay. And you can see how these wicks also really big, long wicks coming all the way down to the bottom of the range. But if you look on, if you have actually look on my trading view chart here, which of course is a different broker, this is a Wanda and on TradingView, and my actual broker is Trade Locker. Look, these wicks come nowhere near the bottom of this range. You see this? This is the same area. I mean, these wicks stop at 1.19826, 1.19826, and here they're all the way down to 1.16, 1.9647, 47. 4.7. So that's a big difference, right? That's a very, very, very big difference, right? Look at that again. 9824, 19824, 19651. Okay, so that's a big difference. Big difference in what happens there. So this is this. I just wanted to make this video for you, just showing you what you need to do as an advanced trader only. If you are a beginner, you're just going to exit, beginner or even intermediate, you're going to exit that trade by 445. Just get out of it. Okay. But if you're more advanced, what I do is I make a decision at 445. Do I want to just get out, or do I want to keep the trade running through the rollover and into the next day? I do this a lot, guys, because in order to get 1 to 2, 1 to 3 risk to rewards, you need to do that most of the time. And so like the other day, for instance, I had 4 trades running at 4:30 p.m. So at 4:45, I just made the decision to just get out of all of them in profit, because I had 4 trades running. I didn't want to run 4 trades. I didn't want to remove stop losses on 4 trades. But if I got 1 or 2 trades running, that's a different story. Today, I just had 1. So I went in, I removed the stop loss, and that was that. I don't want to have 4 trades running. I removed stop losses on 4 trades, and now I've quadrupled the amount of loss that I can incur if something happens and it gaps up or down against me. Okay. So that's what I wanted to make here, guys, for you today. And stay tuned here. I'm going to drop this video on my YouTube channel. If you like these videos, make sure you subscribe to them, like the videos, comment. And also, if you want to get started with our 7-day test drive, drop me a message and I'll send you the link to sign up for that. You'll get access to Jay's boot camp, his 5 live training sessions, which are all recorded if you can't make them, and also our chat room, where we're very active and asking and answering questions all day long. Have a great night. Take care.